This conference will now be recorded.
Tremendous knowledge is needed. और आजकल के लड़कों को तो वो knowledge नहीं होता है. एक स्कूल में एक टीचर ने, हिस्ट्री टीचर ने एक लड़के से पूछा, बेटा in which battle did Tipu Sultan die? The guy said in his last battle. उसको पूछा, where was the Declaration of Independence signed? At the bottom of the page. When was Gandhiji born? On his birthday. In which state does Ganga flow? Liquid state. If you have 6 mangoes and you have to distribute among 20 people, how will you do it? I'll make mango milkshake. You need to have a lot of patience, and we will fail. When you want to achieve success in your career, in your academics, in your business, in your profession, we will fail. And that's the example of the giraffe. When the baby giraffe is born, falls from such a high distance straight on the ground, the mother positions herself right above the baby giraffe. And guess what she does first? Gives it a hard kick. बच्चे का जन्म होता है और माँ आगे हाथ से लात मारती है. तो बच्चा समझता नहीं, अभी तो आया है जिंदगी में, लात मारा, एक और लात मारा. लात का मतलब क्या है मालूम नहीं उसको. अचानक एक झटका मिलता है उसको. So as it's just coming out of that impact, Jhabika, the mother gives a bad second harder kick. Now the guy understands. अगर मैं कुछ किया नहीं, तो ये चलता रहेगा सिलसिला. So this baby giraffe starts getting up on its wobbly legs, on its wobbly legs. And as the baby giraffe gets up on the wobbly leg, थोड़ा खड़ा होना सीखा ना, लात मारती है माँ. Gets up and starts running. And then the mother giraffe goes, hugs the baby and starts kissing the baby. You know why? Because the baby giraffe's flesh is very soft and supple, and hyenas and lions love it. The mother knows that I can't be with the baby giraffe all the time. I have to go and get food for the baby. How would I protect it? इसलिए पहले ही एक ऐसी लात मारो कि ये उठना सीखे, और फिर जैसे थोड़ा उठा ना, तो एक और लात मारो तो याद रहे, फिर उठना सीखे. जिंदगी भी माँ मदर जिराफ जैसी है, कई बार लात मारती है. We fail, we should get up, and we fail again, we should get up. And like I always say, don't just go through life, grow through life.
Welcome, my friends. You got to grow through life, right? Important message. Life will hit you, right? So let us start. What are markets? Time for revision. Gurucharan sir, are you there? Exchange of goods and services, and the meeting point between buyers and sellers to decide the fair value of goods and services, right? So we discussed this: open, high, low, close. What are the types of markets? Cash markets and derivative markets. So what are the cash markets? Where goods are purchased or services are used and the money is paid within 1 to 3 stipulated days. And the seller also needs to deliver the goods or the services within the stipulated period. What is the term derivative? It is referred as a financial instrument which derives its value from some underlying assets. What can the asset be? It can be equities, it can be currencies, it can be indexes, commodities, interest rates, right? So what are the types of derivatives? They are futures, they are forward, they are swap, they are options. So you remember the Rolex watch, tailor-made contract, 6 lakh rupees to be paid and to be delivered on a future date. But the terms of the contract were decided on an earlier date. Is the forward contract clear? Shahid Bhai, which market has the highest forex forward contracts? Thank you, Shahid Bhai. Currency markets. Very good. Swap. What are swaps? When I do an exchange either of currency or interest rate between two parties for a specific time period to be returned back at a later date which is decided between the parties, they are called swaps. Right? Good. Hello Mukesh bhai, how's it going? What did you have for lunch? Is my voice clear? Was it a very heavy lunch? Are you sleepy Sunday evening? Good. Futures are financial contracts obligating the buyer to purchase an asset, seller to sell an asset at a predetermined future date and price. Future contract. If I am buying a Reliance tomorrow on the 7th of June, which is the June 24th contract, so that means I'm purchasing the shares of Reliance which are 250 in quantity. Quantity is fixed. I'm deciding the price tomorrow, whatever the price tomorrow is. And they can only be traded in a futures exchange. Some future contract we call for physical delivery while others are settled in cash. Are we clear with this? Standardized contracts, 25. So Nifty, I think so within a month it's going to be 50. And Bank currently it's 75, within a month it's going to be 50. And Bank Nifty is 25. Reliance 250. So every instrument has a separate lot size. Settlement date, last trading day of the contract. In India, the last trading day of the contract is the last Thursday of the month. So my friends, if that is a holiday, when will the contract expire? If the last Thursday is a holiday, where will the contract expire? Previous day, which is working. If Wednesday is also a holiday, Veena ma'am, it will be the previous working day. It can be Tuesday also. Right? Settlement price. VWAP of the last 30 minutes of the cash instrument traded on the settlement date is called the settlement price. So the last 30 minutes of the cash market traded on the last day of the settlement, price into volume summation divided by summation of volume, we will get the VWAP, which will be the basis at which the contract will be settled and the future price will be settled or closed for trading. Am I making sense? Is this clear till here? Is my voice clear? Good. Good. Nagesh sir, how are you? Nagesh sir, what is open interest? What is open interest? My answer, open interest is number of contracts which are open for trading, which is open. Total number of open position, lovely Manas Bhai. So Manas Bhai, can it be possible there are 12 contracts which are long and 10 contracts which are short? Can it be possible? Can the open interest be like this? No. The total number of long and the total number of short overall position will be the same, because for every long open position there will be a corresponding short open position. Am I clear? So the total open interest will be 10. Is this clear to everyone? You remember the yesterday's example we did? How open interest was going up. So what are the 4 conditions? Can you tell me? Price going up, open interest going up. What is it called? Long build up. That means the buyer who is increasing the open interest is a winner. Why? Because the price is going up. Price is coming down, open interest is coming down. What is that? The person who had built up the long position, he is unwinding. जो तेजी खेल रहा था वो सौदा उल्टा कर रहा है. Right? Now, unwinding means decreasing of the position. Can you see this? Open interest which was going up, now it is reducing. So whenever open interest goes up, it means it is called build up. Someone, market participation is increasing. Whenever open interest is coming down, it means the person who had done the build up is now reducing his position, which is called unwinding. Now, price coming down, open interest going up. What is it? The right word is short build up. That means there is an increase in participation. And since the price is on the downside, that means the short people who are there in the market, they are building up. Right? So if the price is the same and there is increase or decrease, Rahul bhai, we got to wait for the confirmation. We got to wait for the confirmation, then only we can do that. Right? Now, price going up, open interest coming down. When the price is the same, Rohil bhai, neutral, we cannot take any judgment. So the person who had built up the short position here, he is covering. Can you see opposite? So it is either short unwinding or short covering. Right? Please concentrate, all of you right now. Homework will be discussed at the time when we will do the homework. Right now we are in revision. Right? Am I making sense? Let's revise once more. Price going up, open interest going up, long build up. So Bhavna ma'am, when I compare this open interest and price, where will I compare it from? Last expiry. From the last expiry, what is the current expiry showing me? Last 7 days. What is the open interest in the last 7 days? And the third one, what is the average of the last 2 expiries? So my 3 parameters, last 2 expiries average, last 7 days, and from the last expiry. So I get a holistic picture. I get a holistic picture of what is to be seen. Okay? Good. So what is volume? Execution of a particular time period. The purchase by the buyer, sale by the seller equals to volume of 1. So the same concept of the tomato, 40 kilos, right? So that is volume. So what is settlement? All futures and index options are cash settled, right? All index futures and options are cash settled. What do you mean by this? What do you mean by this? So your meaning here is that if you purchase in the cash market, what happens? Quickly. The exchange does the settlement. Is it clear? The exchange does the settlement. How does the exchange do the settlement? Take an example. 15,000 call. And market closes at 15,500. Right? You have purchased a 15,000 call at 100. And if it closes at 15,500, what will happen? What will be your payoff? Rahul sir, 500 rupees. You have purchased 500. This is a call, right? Have we done calls? No. So Rahul sir, Rohit sir, Rahul sir, are your trading options? No. Good. So I just wanted to test you all. Right? How many of you have done the revision and seen the recording yesterday? So one principle, when I'm revising, if you have not seen the recording, you will not ask anyone to repeat. Why? Because I've covered all these topics yesterday, all. I will show you what I have covered in the recording yesterday and I'll do it again today. But in my class, without the recording, no one comes. Why? Because he will be confused when he gets to the live classes and he has not seen the recording. Am I clear with it today? I don't mind people asking questions. But yes, with proper recording, you must see and you must be confident that you've seen the recording and you are confused. कुलदीप भाई माइंड मत करिएगा, हम और आप दोनों फ्री आदमी हैं. We are not as busy as the President of America, who has time to play with his dog. Right? What I'm asking you is only the sacrifice for these 4 weeks. I'm not asking you to do it for a lifetime. Now the question here is, Kuldeep bhai, had I not done the revision, आपको तो ये पता भी नहीं चलता कि ये कॉन्सेप्ट आपका क्लियर नहीं हुआ. Is this correct? Am I right in saying that? These 4 weeks, if I had not done revision today and if I had started off with the next class, would your concept have been clear? You would have forgotten the recording also. Lovely, ma'am. Lovely. So here there are sacrifices to be made. I'm very, very clear. A trainer can only teach you how to swim. The swimming has to be done by yourself. If you don't revise, nobody in the world can help you. I'm very blunt in saying this. Right? Now see very carefully. State Bank of India. What did I tell you yesterday to see in the open interest? How did I compare the open interest? Lovely Manas bhai. What are the points to be seen? I'm ready to go the distance, my friends, but you have to come to the half part of the journey. Because at the end of the class, if you are not able to answer, it is me who has failed, not you. Now, can you see what was at the beginning of the expiry? What has happened to State Bank? What is the open interest? Price has gone up. Open interest has come down. What is it? So please, all the 4 of you all, please write these 4 diagrams. All the 4. What are the 4 diagrams? So this is long build up, long unwinding, short build up, short covering. So what are you seeing in State Bank? Last one. So what is the State Bank chart telling you? So before you all were looking at State Bank, I was studying State Bank. The price has given a breakout. But can you see the momentum? Momentum is not there. So can you see I've drawn a line at 426? So that is why I'm not very comfortable in buying State Bank. Why? Because someone is squaring off his positions. Now, I've compared from the beginning of the expiry. This is also the last 7 days. Can you see? From the last 7 days continuously, position coming down. Now I'm comparing this number with the last 2 expiries. Can you see? What is the open interest? I'm comparing this. Bhavna ma'am, are you there? Kavita ma'am, are you there? All others, are you there? I answer. I will compare this with the last many days expiry. What is it telling me? What is the comparatively open interest position? What is it? 8 crores 88 lakhs. Let me see the average here in the middle of the May. So the open position is below the May average. Yes. So this extra bit of rally which happened in May is all over. They are slowly booking out of their positions. Now let me take you to April. Also it is below the April position. So what is State Bank telling you? Be cautious. Be cautious. Okay, can you see here? This is a horizontal line. Can you see this? Alt plus H. When you type here, you just click here. Horizontal line will come. Right? Okay, so the support and resistance levels, you got to draw your line. If you see, this was an important breakout level from where the breakout took place. So if it is back into the trading range, it will close below 425. Right? So if it is bullish, it will stay above 425. If it is bearish, 2 closes below 425, it is a trading range. Can you see the volume in the last many days? Can you see the size of the candle? What is it telling you? Momentum is over. So I will only look at, I will not enter State Bank seeing the open interest. I will wait to see whether it goes below 426 or not. Am I clear? How are you to see the open interest? Everyone. Srinivasan sir. Shraddha ma'am. Nagesh sir, one day is deceptive. This is a common problem in India. Most of the people see open interest day to day. We should not see day to day. Why? One day can be a deception. You have to follow a trend. Right? We have to follow a trend. Good, Nagesh sir. Welcome to the jungle. PNB, there is result which has come out. Bhavna ma'am, you will not get the clarity. It is in a trading range. So by tomorrow, you will get the clarity in PNB once the results gets adjusted into the stock. So PNB will be confusion. So when there is confusion, leave it. It is not necessary the open interest has to give you a result. Right? So this is the adjustment. If I see here, PNB, there is no proper clarity. Open interest, flat, slightly down, price slightly up. So there is no clear clarity in PNB. But I think so tomorrow morning when the results gets adjusted, you will see the clear clarity at the end of the day. Whether the price is going to be either below 42 or above 44. So the breakout level is 46. So keep a tab above 46 on PNB. But my hunch is it's a trading range. It is going to remain in this trading range in this expiry. Am I clear? So can you see this open interest? It was going up, coming down. It is there and there itself. Price is also there and there itself. Can you see the price? 42 to 43. No major change. So tomorrow, Nagesh sir, we will see the clarity here. Hopefully, my hunch is the open interest might come down further. Price will remain flat. I might be wrong. There's a caveat. I go wrong. Right? Hello, Shraddha ma'am. How is it going? I hope your fever is at control. Good. Yeah, Kuldeep bhai. Yes, Kuldeep bhai, open interest is a must. Why? Because when I showed you State Bank of India chart, how is it looking? It is really looking very bullish, right, Kuldeep bhai? But मैंने आपको open interest से दिखा दिया. अभी नहीं देखने का. Wait for some time. BHEL, without showing yesterday, what did I show you about BHEL? That BHEL can go up tomorrow. Vijay sir, I told you should not see day-to-day open interest and price comparison. I have told you this. Why? Because day-to-day comparisons can go wrong. Only in a trend you must see 7 days trend, last expiry trend, or the current expiry. There are only few scripts, Ramindo sir, which are getting into the ban. So don't worry much about it. What I said is it above the last 7 days average or the last expiry average? Right? I answer practice, automatically you will get. Don't worry. First thing is you have to look, is the price giving a breakout or not? If the price is not giving a breakout, what will open interest tell you? Right? Dhiren sir, you will get to see the market. Open interest will tell you. Let's take a small example. I think so. This is a new thing. It has got you all excited, right? So let us take a small example. Tata Steel. Okay. So where was the breakout happening, Kavita ma'am? March 30th. So let us go to Tata Steel. How many of you made money in this steel sector rally? So that time, fortunately, we made money. All my students made money because they caught the breakout with the help of future open interest. Right? So can you see this? This day Tata Steel price shot up. 30th of March and open interest shot up. Can you see the last expiries? It was much lower. 4 crore 11 lakhs. Right? So what happened after that? The trend maintained above 4 crore 40 lakhs. Slowly, can you see here after a consolidation? What happened? There was a consolidation here. 3 days, Tata Steel stayed at 860, 870. Can you see this? This day again, open interest, April 7th, it went on increasing. Again, price up, open interest up. Then what happened? There was some correction, right? From 918, there was some correction. It entered into a trading range. This was a fresh breakout. Can you see? 851 price went to 920. Open interest went up. Right? Now just see this. Can you see the spurt in open interest? Price went to 1030. And after this rally, if you see April, May, the open interest went up very quickly, but it did not give a chance to get up because it just happened in one day from 1060 to 1200 in 3 days. So when it happens this quickly, it is very difficult. And from here, can you see the profit booking? Price went up, open interest came down. And slowly, now you're back to normal. Now can you see there is no interest in Tata Steel? No interest. So now the open interest is just normal. Just normal. So when you see those types of breakout and spurge, that is where you will get the benefit. Right? Good. So what is now cash settled? You're buying Nifty futures at 15,000. It closes at 15,300. So this 300 rupees is credited to your account into the lot size, cash settled. But if you have bought Reliance futures and you've forgotten to square off, what will happen? You have to take delivery, right? You have to take delivery. Okay? Good. Yeah, that is all cash market. So if you are not there, you have to pay a penalty. So we have done this. Futures equals to spot into R into T. So this is the formula for future pricing. So what are the market sentiments? What are the market sentiments? Global markets being positive. They are called market sentiments. Good results by Indian companies like Reliance, State Bank. Positive news by the finance minister. Positive data. They are all part of positive market sentiments. Right? So in reality, future prices are dynamic in nature. They move with respect to market sentiments. When future prices are greater than spot prices, what is it called? Contango. When spot prices are greater than future prices, what are they called? Backwardation or ulta badla. Right? So in futures, you don't have to pay the full amount. You can pay with the help of a certain percentage of value, which is called the margin. Any questions now regarding futures? The margins are from time to time changing, ma'am. There is a margin calculator there. So if you want to trade any lot of futures, please go to the margin calculator, right? They will tell you from time to time, the margins keep changing. So on an average, it is between 15. You please go, ma'am, go to Google, type futures margin calculator. You will be shown the Zerodha margin calculator. So once you type there, you will get the margin, what is available to be done for futures. Utility of futures and discount. What was the question I answered? Yeah, Manas sir, delivery in the future means you have to deliver the stock in the cash market. What is the utility of premium and discounted price? Where is, okay, so what Ayan sir is asking, what is the meaning that is the cash market price greater than future or the future market price greater than cash? So this is the way of functioning in the exchange, right? On the last day of the expiry, the futures will be equal to cash. But before that, there are other factors which I said determines whether this will be greater than this or this will be greater than this. So it is demand and supply which determines this. But on the last day, future price equals to the cash price. Is this clear? That is the only utility. The future price is equal to the spot price. And it can be greater during the period of the expiry or lesser than the spot price during the period of the expiry. That depends upon the market sentiments and other factors. Good. Any other questions? So can we solve options? Are you all set? Good. What are options? How many of you have done? Rahul sir, if there is a contract of 10 lakh rupees, total size is 10 lakhs. So you will require a contract size of 20 to 25%, around 3 lakhs. So for a single lot, you will require 3 to 4 lakh rupees. Right? Minimum 3 to 4 lakhs, single lot. What are options? Who can tell me? So Nilesh bhai, what has been your trading journey in options? Okay. So option is a derivative contract which gives the owner the right to buy or sell securities at an agreed upon price within a certain period of time by paying a certain amount as premium, but is not obligated to buy or sell the securities. Similarly, the seller on the receipt of the premium loses the right, but is obligated to deliver or buy if the buyer so demands. How many of you understood this definition? You know, I am very poor in studies, so I never understood all these technical definitions. I never understood. You know, anything relating to studies, it was very tough for me. So let's use a simple method. How many of you are politicians here? Okay, Rohil bhai, welcome. So Rohil bhai, you are a youth politician. Which party do you do? JLM or BJP or Congress? Okay, you're independent. Lovely, Royal Bhai. Lovely, lovely. So now let us assume that Rohit Bhai's uncle is the health minister, right? So now there is a friend, which is Suraj. He has a piece of land near the garbage dumping yard. So, Kuldeep Bhai, can you tell me which is the richest vocation in India? कौन से आदमी लोग as a community or as a, which are the richest people? Politicians, businessmen? Okay, Royal Bhai, you are mistakenly wrong. Number one are the religious gurus. Number one are the religious gurus. They have crores and crores in their trust. Then you have politicians. So there was a surprising part. Average income of our members in the Lok Sabha is 100 crores. Net worth, sorry. Average net worth of our Lok Sabha members are 100 crores. Because someone is more than 3,000, 5,000. So the average comes to 100. Now I'll tell you the reason why politicians are important and why they make money. Just see this. There are two friends, Suraj. He had a piece of land near the garbage dumping yard. The price of the land is 50 lakhs. But the price of the land similar to that in the areas close by, near to the dumping yard, are 75 lakhs. Can you tell me the reason why is the land cheaper? Can you tell me the reason, Kuldeep sir, Kavita ma'am? Foul odor. Because of the smell, the land, nobody wanted to come near to that land. Right? Now, Ajay's uncle was a health minister. Now here comes the important part. He says that the government hospital is going to come down at the garbage dumping yard. Can you see the perception is changing totally? Now you were seeing a garbage dumping yard, and now you're seeing a government hospital coming up. Possibility. These are all possibilities. So what is going to happen? The price of the land now at least is going to go up to 75 lakhs. Ajay knows that the price of the land is at least going to go up to 75 lakhs or more if the hospital comes up. He goes to Suraj and tells him he will buy his land after 3 months. He will buy the land after 3 months. But he is paying him 10 lakh rupees upfront today. What is he doing? He is saying, I am paying 10 lakh rupees upfront today. After 3 months, I am going to pay you 50 lakh rupees. 10 lakhs right now, 50 lakh rupees after 3 months. Are we all clear till here? Are we all on the same page? Okay. If Ajay fails to pay, what is he saying? If I fail to pay you this 50 lakhs after 3 months, you can keep the upfront amount. What is he telling you? In case if I don't come after 3 months, you can keep the upfront amount, right? Now, it's a very clear contract. I'm giving you 10 lakh rupees. After 3 months, I will give you 50 more lakh rupees and I will take the land. Right? So what is he paying? 10 plus 50 if he takes the land. 10 is upfront, it's gone. He will pay either 50 lakhs. In case he is not able to pay that 50 lakhs, Suraj gets to keep that 10 lakhs. Now what is the possible outcome? Government hospital is announced. Very true. Now what will happen to the price of land? It can go to any value depending on how much hospital land is going to be there. Now the price of land goes up to 95 lakhs. Right? What does the price of land go up to? 95 lakhs. Now what will Ajay do? He will bind a buyer. He will collect at 95 lakhs, pay 50 lakhs to Suraj. What will he do? He will pay 50 lakhs to Suraj. Right? So now, how much did Ajay make? 95 lakhs minus 50 lakhs, 45 lakhs. So he received 45 lakhs. How much did he pay in the beginning? How much did he pay in the beginning? 10 lakhs. Right? So what is his profit? 35 lakhs. What was his investment of Ajay? Bhavna ma'am, what was Ajay's investment? Only the 10 lakhs he paid in the beginning. Only the 10 lakhs. Are we all on the same page? $95 lakhs he sold the land. He gave 50 lakhs to Suraj as promised after 3 months. So 95 minus 50 is 45. But he also paid 10 lakh rupees at the upfront. So it is 35 lakhs. Right? Now, this is the best case scenario when the hospital project was announced. Now, you know, in India, my friends, there are a lot of projects which just get announced. It's still happening. They're seeing the light of the day. No announcement will come. So after 3 months, there is no announcement. Since there is no announcement, what will happen, my friends? The price of the land, will it go up? It will remain there, Kuldeep bhai, wahin pe rahega. So Ajay goes with folded hands to his friend Suraj. He tells him, my friend, I'm unable to take the land. I'm unable to make the payment. You kindly keep those 10 lakhs rupees which I had given you at the beginning with you. Right? So Ajay gives up his right. Suraj gets to keep that 10 lakh rupees up front. So what is Ajay's loss in this scenario? Lovely Kuldeep bhai, only the premium, 10 lakhs. Are we making sense of this? Good. Now the worst case scenario. The project is cancelled. The price of the land remains at 50 lakhs. कुछ नहीं हुआ. इंडिया में बहुत बार ऐसा होता है. Dreams are sold, but in reality it becomes zero. So what happens? After 3 months, Ajay goes with folded hands to Suraj. My friend, keep those 10 lakhs. I'm unable to buy the land. So what is Ajay's loss in this scenario? What is Ajay's loss? Only the upfront premium paid, 10 lakhs. So my friends, have you heard the word bayana? When you do a land deal, you pay a token amount. Is this something like this? No one heard the word bayana? Okay. So basically in India, when you do a land deal, North India, even in Maharashtra, Nilesh Bhai, when you make that token payment for any property or security. So in case if you fail to honor the deal, the token payment will be kept by the seller. Now let's come back to the definition. Option is a derivative contract giving the owner, who is the owner? Ajay, the right to buy or sell. What was the security? Land. Agreed upon price. What was the agreed upon price? 50 lakhs. Within a certain period of time, 3 months, by paying a certain amount as premium upfront, 10 lakhs. But he is not obligated. That means in case if the price does not go above 50 lakhs, Ajay is not obligated. He does not need to buy that land. Similarly, the seller Suraj, on the receipt of premium 10 lakhs, seller receives it, loses the right, but is obligated. So if Ajay asks, please give me the piece of land, he cannot say no. Is the definition now clear? Oh, you guys are champions. Amazing. Lovely. So who's the buyer, Ajay? What does the buyer do? He pays the premium. He has the right but not the obligation. That means he can only lose till the amount of premium paid. Limited losses. So option buyer, limited losses. Option buyer has unlimited profit. Is this clear? If the price of the land went up to 2 crores, Ajay's profit would have been much higher. Good. The seller receives the premium, right? Who is the seller? Suraj, right? Receives the premium. Kuldeep bhai, my friend, please don't use these types of words. You scare me. Credit spread, debit spread. My sweat is coming out in the AC. Let us do with small words, right? The seller receives the premium. What does he do? He does not have the right, but he is obligated. That means when the buyer demands, if the price goes up to 2 crores, there is a possible loss which he is incurring, right? What is the maximum profit of Suraj? How much can Suraj maximum earn? Only the premium received 10 lakhs. Limited profit, unlimited loss. Am I clear? Good. So now let's learn the terminology. Who is the option holder? The buyer. Ajay is also called the option holder. Option premium. The amount that option buyer pays to the option seller is called option premium. So this premium, my friends, is actually traded in the market. So the buyer and seller trade on the option premium. What is the underlying asset? The specific asset on which an option contract is based. So when I'm trading Bank Nifty option, what is the underlying asset? Bank Nifty spot. When I'm trading Reliance option, what is the underlying asset? Reliance spot. Is this clear? It is always the spot price. The price at which the asset can be bought or sold is called the strike price. So what was the strike price in the piece of land? I answered. What was the price of the piece of land? What was the price? 50 lakhs. So if I mine a 15,100 strike price call, we will come to what is called later. So this is called the strike price. So when I trade the option, the strike price will be mentioned. So I will come to what is the significance of the strike price later on. I'm just doing the basic definition. Expiration date. Same thing, like the futures last Thursday. How many of you are aware that there is something called Bank Nifty, Nifty, and Fin Nifty option, which have every Thursday expiry? How many of you have traded Bank Nifty, Nifty, and Fin Nifty? They have expiry every Thursday. Every Thursday. So these are the only three contracts in options. In futures, we don't have any contract which are weekly expiries. In options, only these three contracts, they have every Thursday expiry. Every Thursday. Am I clear with it? Good. Who is the option seller or the writer? Suraj, who takes the short position in the option. Are we clear with these four terminologies? Same thing like the futures. Volume. In option, we also have the volume, number of transactions which are executed for a particular period is called volume. The purchase by the buyer and the sale by the seller equals to volume of 1. Same concept. What we did with tomatoes. Same concept. What we did with futures. Same concept is what we have in options. What is open interest? Number of option contracts that are open for trading. Number of option contracts that are open for trading. Did we remember we did this in futures? Vijay sir, did we do this? Same concept of futures in options, the same concept. The number of option contracts which are open for trading is called open interest. For every long position in open interest, there is a corresponding short position. The purchase and sale will always be equal. Are we clear till here? Good. Sharmila ma'am, how's it going? So today I have left a lot of people who have come without revision. But in my next class, if I don't see people revising, believe me, I can be very strict. So don't take it as an advice as well as a warning. Right? It's an advice as well as a warning. Because I'm going to ask questions to you all specifically in the next class. Okay, and you have 7 days. So be ready and do your revision. No excuses. What are the types of options? There are 2 types of options, call options and put options. Right? So what are call options? You remember the piece of land. When you are expecting the asset prices to go up, you are buying the call option. The buyer of the call option has the right, but not the obligation. You remember Ajay Suraj example? Just let's revise this once more. The buyer of the call option has the right, Ajay has the right, but not the obligation to buy a particular commodity from the seller, Suraj, certain time, 3 months, certain price, 50 lakhs, which is called the strike price. The seller, Suraj, is obligated. The buyer pays the fees, which is premium, 10 lakhs. So can we say that when you are expecting the asset prices to go up, Ajay expected the land prices to go up? So could we say that was an example of a call option which we did here? This land example, was it an example of the call option? Yes or no? Yes or no? Right. Welcome, Kavita ma'am. You become the Rajnikant of my class. You went and came back 5 times. Now please see this. Now I am shifting this to the stock market perspective. What was the underline in the Ajay Suraj example? Land. Now I'm going to take you to Bank Nifty. How many of you have been to NSEindia.com? Okay. This is the National Stock Exchange of India site. Please go to market data here, the 3rd column, home about market data. Can I see your option chain? I'm clicking on this option chain. Now this option chain, my friends, is a matrix which contains the details of any underline. Here the underline is Nifty. For a particular expiry, 10th of June till the 10th of June, whatever the contracts are listed, these are called the strike price. So can you see from 12,800 till 17,200 strike prices are listed? And can you see the left hand side? This is the call, right? Now can you see that each strike price, there is separate trading going on, bid and ask, bid and ask. Can you see the 15,700 call? Can you see the bid price? 89. 89. What is this bid price and ask price? What is this bid price and ask price? What is it? It is the premium, my friends. Option premium. This is traded in the market. 15,700 call. The premium is 89 rupees. Buyer side 89.90, seller side. Can you see the bid quantity 300? Ask quantity 750. Compared to yesterday, the prices have fallen by 16 rupees 50 paisa. The last traded price is 89 rupees. Leave this IV, we will discuss later. What is the volume? 8,17,396. Can you see the open interest? 46,020 contracts. Right? Compared to yesterday, what has happened? The open interest has gone up. Open interest has gone up by 18,903 contracts. Can you see this? So this details in a matrix is given in this option chain. Each and every strike, can you see there is a separate open interest, separate option premium. Can you see this? Separate volume. So for each strike, there is separate trading. These are called strike prices. The right to buy. What is the strike price? For a call, right to buy. Okay, so now let us just see this whole definition once more. Options like futures will have common lot size. So if Nifty futures is having 75, Nifty option will also have a 75 lot size. If Bank Nifty has 25 in futures, in options also it will have 25. Right? Expiry in the land example, 3 months. Here what do you have? 1 month, 2 months, 3 months. Right? One month, 2 months, 3 months. Okay? So options like futures have an expiry on the last Thursday of every month. Did we discuss this? Can you see in Nifty? 10 June, Thursday. When is the next expiry after that? 17 June. What is the next expiry? 24 June. Now let me take you to Bank Nifty. Same thing, 10 June, 17 June, 24 June. But let me take you to a stock, Bajaj Finserv. Can you see? It only has monthly expiries. So only Nifty, Fin Nifty and Bank Nifty. These are your three indexes which have option weekly expiries. Are we all on the same page? Now what is the reference price? 50 lakhs. So in Nifty and Bank Nifty, what do we get? Strike price. Strike price is the right to buy. So supposing if I'm buying 37,000 call, right to buy is called the strike price. So above 37,000, you remember Ajay Suraj example? When did he exercise his right? When the price of the land went above 50 lakhs, which is only above strike price will the buyer exercise his right. Right? Premium 10 lakhs. Here the premiums are separate. For each strike, the premium is different. Who is the regulator? In Ajay Suraj, it is only a contract between two people. There is no regulator. Contract on good faith. In the stock market, whenever you do a transaction, the exchange is the regulator. Exchange is the regulator. All options are cash settled. We know that. Did I tell you in index? All options are cash settled. Is this clear? Good. So now let's come back to the real world. So, Vijay sir, there is a site called Opstra, opstra.defineedge.com. My friend Sunil sir is very bullish in Nifty. My friend Sunil sir is very bullish in Nifty. He feels by the 10th of June, Nifty will go to 16,100. What does he do? Can you go here? Can you see the strategy builder? So Sunil sir goes, he buys 15,900 strike price. What does he do? He buys 15,900 strike price. All. What is the price? 25 rupees. Can you see here? Now, when will Sunil sir make money? See the land example. When will Sunil sir make money? At 10th of June, which is the expiry date. When he will make money? When? Can you tell me? When Nifty trades above his strike price plus the premium. You remember the land example, Vijay sir? 50 lakhs, right? Plus 10 lakhs. So this is called a payoff diagram. So his maximum loss, Rahul bhai, what is his maximum loss? 25 rupees the premium paid. Can he lose more than the premium? No, 25 into 75. So till 15,900, can you see here? He can only lose 25 rupees. After 15,900, strike plus premium, you remember 10 plus 50. So 15,900 plus the premium is his break-even point. Above 15,925, he makes unlimited profit. What does he do? He makes unlimited profit. So what is this product? If the market stays below my strike price, which is the right to buy, I will only lose the premium. If it starts trading above my strike price plus premium, I will start making unlimited profits if it goes up. Is this clear? So when I am a buyer of a call, I am bullish in the market. My risk is limited to the premium paid. Above the strike price plus the premium is my break-even point. And above the break-even point, I will have unlimited profits. Lovely. Is this clear? Good. So let's see what is the payoff. The payoff diagram, x-axis is the price of the underlying. Y-axis, profit, loss. So when I'm the buyer of the call, I expect the prices to go up. So my maximum loss will be till the strike price. Then my loss will come on decreasing. My break-even point is strike plus premium. See the land example. Right? Is this clear? So any price above the strike price, I will exercise my right. Any price above the strike price, I will exercise my right. Aman sir, this is on the last day of the expiry, 10th of June. So Aman sir, here is the market. If the Nifty is at 15,700 on 10th of June, it closes at 15,700, what will happen? What will happen, Aman sir? You will lose all the premium, 25 rupees gone. Below 15,900, your loss is the premium paid. Is this clear? Yeah, this is for the expiry on 10th June. Now, my friends, Aman sir, you have bought the 15,900 call, right? At 25 rupees. Aman sir, Nifty closes at 15,910. Will you exercise the call? Will Aman sir exercise the call? Any price above 15,900. Can you see here? Any price above 15,900, Aman sir will exercise. So, right to buy 15,900. Current price 15,910. So, how much does he get? 10 rupees. Right? What is his premium paid? 25 rupees. So what will be his loss? 15 rupees. So can you see here? That is why between 15,900 to 15,925, his loss is reducing. Can you see this, Satish sir? Good. Just see this carefully. Any price below the strike price, your loss is limited to the premium. From the strike price to your break even, your loss is coming down. Above your break even, as the price is going up, unlimited profit. Right? Good. Now, my friends, Meena ma'am is confident that with the global markets, Nifty will not cross 15,900. Nifty is not going to cross 15,000. She is confident. So what did Meena ma'am do? She has sold the 15,900 call. So did I tell you, for every buyer there is a seller? Nilesh sir was a buyer. Meena ma'am feels that Nifty is not going to go above 15,900. So what has she done? She has sold this call at 25 rupees. So when you are a seller of the call, when you will have a loss? When it will go above the strike price, 15,900 plus the premium. Why? Because the premium you have received. So strike plus premium. That is equal to 15,925. Can you see that? After that, if the price keeps going up, you have unlimited losses. So you start with only the premium received, limited profit, and above the strike price and the premium, you have unlimited loss. So what is your maximum profit? Only the premium received. What is your maximum loss? Unlimited. Now, my friends, do you remember Nilesh sir's graph, option buyer? Just see very carefully. Option buyer started with limited loss, same break even, and unlimited profit if the market went up. Can you see these are a mirror opposite? Option buyer and seller are mirror opposite. Now do you understand it's a zero-sum game? Rahul sir, if Nilesh bhai makes money as an option buyer, Meena ma'am will lose that same amount as an option seller. Meena ma'am, did you understand? If you are losing, if Nifty goes to 16,000, you are losing money as an option seller. Nilesh bhai is making money as an option buyer. If Nifty remains at 15,700, Meena ma'am as an option seller will make money. Nilesh bhai as an option buyer will lose money. Is this clear? Call buyer, call seller. I answer. Have we come down to the put? We haven't come down to the put at all. Now we come down to what is the put option. A put option is a contract which gives the owner the right but not the obligation to sell a specific amount of underlying asset. What was called right to buy? What is what? Right to sell, right? Underlying security as a specified price within a specified time frame. This is opposite to a call option, where the buyer or the holder has the right to buy underlying security at the specified price before the option expires. So before I come to this definition, as I told you, I'm very poor in studies. So ladies power, who is married? Who is married? Rahul bhai, ladies power, you are not on the female power. Okay, Bhavna ma'am, Meena ma'am. So since Bhavna ma'am is the first one, I take her. Bhavna ma'am's husband has got a BMW convertible. BMW convertible. Bhavna ma'am, where are you staying? Delhi? Bhavna ma'am, which place? Are you in India or abroad? Punjab, lovely. So you are in Punjab, right? So Bhavna ma'am has put a condition. I want to go to Simla in this new BMW convertible. Bhavna ma'am's husband has got worried. The roads are pathetic in the monsoon rains, and he has done a survey that 50% of the cars get damaged. Right? 50% of the cars get damaged. Bhavna ma'am has said, either I go in this car or I will divorce you. Husband is really worried. So friends, how will you bail out Bhavna ma'am's husband? How will you bail him out? How? My God, what has happened? All the married men, all the unmarried men, where are you all? I can understand. My God. Okay. How many of you heard bumper to bumper insurance? Bumper to bumper insurance. If I buy an insurance which has full 100% protection on repairs. So if I take that insurance, I can go very peacefully to Simla and enjoy the weather there. Yes? Good. So let's see this. Ravi has a car. The car is 1 year and it has only run 5,000 kilometers. He has to go and meet his relative in Bhuj from Pune. The roads are extremely bad because of the rains. And he has been told that 50% of the car needs repair. And some complete breakdown and major works needs to be done. So he has to go down and he has got a review that the roads are really bad. And some cars have completely broken down and some cars have had 50% repairs. The value of the car is worth 6 lakhs. Ravi gets an insurance for 1 year. Okay, so he has paid 30,000 rupees to get a full 100% on repair. How many of you have done an insurance in your lifetime? How many of you have done insurance in your lifetime? Meena ma'am, have you taken any claims? So when you go down and you take an insurance claim, the insurance companies that deducts some value of your asset, right? Some value of an asset. So here what are they saying? After 40,000 rupees of expenses, you will get the claim. So there will be a deduction of 40,000 rupees worth of expenses. After that, full 100% claim you will get. Now what are the three outcomes? Base case scenario, the car is completely damaged. So the insurance company replaces the new car with that of the existing car. So what will be Ravi's profit? What was the value of the car? 6 lakhs. So what will the insurance company deduct? 40,000, which is the value, less 30,000 premium, because he has paid the premium upfront. So 6 lakhs minus 40 is how much? 5 lakhs 60. Less 30. What is his profit? 5 lakh 30. Am I clear with this? Good. Now, base case scenario, there is a damage, and the damage is worth 82,000 rupees, right? So, insurance companies will deduct 40,000. What is remaining? 82 minus 40, 42, right? After 42, what is remaining? 30,000 is already paid for the premium. He saves only 12,000. Right? Worst case scenario, nothing happens. He loses the 30,000 rupees premium. Now let's go down to the definition. Owner of the rights, what happens if the car is damaged? Specified asset at a specified time frame, 1 year. Right? What was the price? 40,000. He's ready to sell the car. So let us first go down and convert this put option into the market. What is the variable? Ravi's insurance. What is the Bank Nifty? Bank Nifty options. Index options like futures will have a common lot size. What was the expiry, Ravi insurance? 1 year. In Bank Nifty, we have weekly, monthly, 2 monthly, 3 monthly options. What was the reference price? 40,000. So here in option chain, these are called your strike prices. So if I go down, can you see the put? The strike price of call and put have different premiums. And these premiums are traded in the market. Right? Each strikes have different open interest, different volumes, and different change in open interest. Am I making sense? So can I say this, Bhavna ma'am? All put options are like insurance. When the market is coming down and I'm buying a put, the put will go up. Why can I see this example? Right to sell an asset below the strike price. So if I'm buying 15,500 put. What am I saying? I am ready to sell below this price, which is the strike price. For the call, what was it? I was ready to buy above the strike price. For the put, right to sell an asset below the strike price, but not the obligation. So in case if the market goes up, I'm not obligated to purchase this put. In the call, it was opposite. In case if the market remained below 15,700, I was not obligated to purchase the call. Am I making sense? So my friends, Bhavna ma'am, if we take a life insurance policy, do we take it to die? Why do we buy put option? Why do we take insurance? Rohit sir, in case if we die, the financial loss which will be borne by our family, the lump sum amount which the insurance company gives you will compensate for this. So when you have taken a car insurance, the financial loss which would have occurred to you because of the car accident or the damage is compensated by the insurance policy you have taken. Is it clear? Good. Right. My friend Ayan sir, he is bearish in Bank Nifty. Can we see the Bank Nifty chart? Do you think it is bearish? Just see this chart. Where has the selling come from? High. Right? I would say it will only become bearish if Bank Nifty trades below 35,100. But Ayan sir feels that Bank Nifty is bearish with his calculation. What does he do? He buys a put. What does he do? He buys a put. So he is buying a 10th June 35,100 put. Why is he buying? Because he's expecting the markets to come down. So he has paid a premium of 232 rupees. Right? So what do you do when you are buying a put? You want the market to come down. So Ayan sir is wanting the markets to go below 35,100. Above 35,100, what is Ayan sir's loss? The premium pay 232. Am I making sense? So when I'm a buyer of a put, my loss is limited to the premium paid above the strike price. Now below the strike price, what will be my break-even point? For the call, what was the break-even point? What was the break-even point for the call? Yes, my friends. Strike plus premium, Satish sir, for the put. Can you see when I'm buying a put, I want the prices to go down. So it will be strike minus premium for the put. minus premium. For the call, it is strike plus premium. For the put, it is strike minus premium. So 35,100 minus 232. Can you see this? 34,867. So below that, if the price keeps going down, I will have unlimited profit till it comes to hypothetical zero. I will have unlimited profit. Am I making sense? So when I'm a buyer of a put, I answer he's expecting the prices to go down below the strike price. Strike minus premium is the break even. Below the break even is unlimited profit. Now, do you remember the price, the payoff of the call? Limited loss, unlimited profit when the underlying went up. You remember this chart? Now for the put, limited loss, unlimited profit when the underlying falls. Am I clear with this? After 5 minutes, I'll be giving you all a break. Just concentrate for 5 minutes. Strike minus premium. I answer, are we on the same page? My friend Nagesh sir feels Nifty is not going to break 35,100. There is a strong support. He has sold the 35,100 call. So Nagesh sir receives 232 rupees premium. Yes. What does he receive? 232 rupees premium. Right? What is the strike? What is the break-even point? Nagesh sir will not have a loss till what level? Strike minus premium. Why? Because till 35,100 he is not going to receive any loss. Plus he has received the premium. No loss. After that, if the prices goes below the level, strike minus premium, he will have unlimited loss if the market comes down. Now, do you remember put buyer? I answer limited loss 232. Sorry, 232. His loss started reducing after it went to strike plus break even. And below this leg, strike minus break even. And below that, he had unlimited profit. Put buyer, put seller. So the put buyer starts with limited loss. His break-even point is strike minus premium. And below that level, he will have unlimited profit. Put writer, limited profit. Strike minus premium break-even, unlimited loss if the market goes below the break-even point. So can you see this? Both are mirror opposite, put buyer and put seller. Good. Is this clear? Put buyer pays the premium. Put writer receives the premium. Strike price for a put is the right to sell. Break-even point, Kavita ma'am, is strike minus premium. Unlimited profit for the put buyer if the price goes below the break-even point. Unlimited loss for the put writer if it goes below the break-even. Good. Do not worry, my friends. Those who are new, like Kuldeep sir, what you will require is to see the revision. Why? Because these are the few charts you are seeing for the first time. But always remember the principle. What is the principle? Call buyer, limited loss. So the call buyer will start with the loss, go with the profit. This is the profit. This is the loss when the underline goes up. Call writer will start with the profit, go with the unlimited loss when the underline falls. This is the profit when the underline goes up. Put buyer starts with a profit or a loss. Vijay sir, put buyer starts with a profit or a loss. Kavita ma'am, loss. Unlimited profit if the market goes down. Put writer, limited profit, unlimited loss if the market goes down. So just learn these four graphs. Call buyer, call writer, put buyer, put writer. Once you have learned all these four graphs, so call buyer, can I repeat, Nagesh sir? Limited loss, unlimited profit, underline up. Limited loss, unlimited profit. Call seller, limited profit, unlimited loss if underline goes up. Just opposite to a call seller. Put buyer, limited loss, unlimited profit if the underline falls. Put writer, limited profit, unlimited loss. Can you see this? Unlimited loss if the underline is falling. Good. 5:57. Can we take a 10 minutes break? Great. Please come back by 6:07. 6:07. welcome back. Hope you guys are fresh. So let's do the revision once again. So when will you be a call buyer? When you are expecting asset prices to go up. So what will you do? Limited loss, unlimited profit when the market goes up. Is this making sense? Limited loss, unlimited profit when the underlying goes up. Yes. I answer, are you back? Meena ma'am, are you back? Right. How was the break, Meena ma'am? Right? Lovely. So basically, the buyer of the call pays the premium. What happens to the seller of the call? He receives the premium. Limited profit. Unlimited loss if the underlying goes up. This is the seller. His profit is limited till the strike price. If you have sold a 15,700 call, right? Above that, it is loss. What is the loss from the break-even point? So what is the break-even point of a call? What is the break-even point of a call buyer or a seller? Strike plus premium. Lovely. Opstra is free for plotting the strategies. Now, when you are a put buyer, limited loss, unlimited profit. What is the break-even point? Strike minus premium. Right? Is this clear, put buyer? You start with a limited loss, only the premium amount, unlimited profit. Put writer, limited profit, unlimited loss if the underlying goes down. Satish sir, lovely. Lovely Satish sir, you're smart. Satish sir, where are you from? So you have taken my next question, Satish sir. When will you be a call buyer? When will you be a put buyer? When will you be a call seller? When will be you a put seller? You have taken my question. So I'm giving you time. I will discuss this at the end of the class today. Now let us come down. What are American options? What are European options? Right? Now my friend, Kuldeep sir has bought a 15,500 call. Right? Nifty has gone to 16,000. What will happen? Will the call go up? Call premium will go up. So Kuldeep sir bought it at 100 rupees. He sold it at 500 rupees in the market. He booked his profit in the market. So as a buyer of a call, हिरेन भाई, हम लोग मार्केट में कभी भी खरीद सकते हैं और कभी भी बेच सकते हैं. Am I making sense? Anytime during the markets, in a profit or a loss, I can buy and sell my open position. If I have sold a call, anytime I can buy back that call in the market. Are we clear? Hiren Bhai, Kuldeep sir is a very busy man. 15,500 strike price for purchase. He forgot to square off. Nifty closes at 16,100. What will happen? Exchange will square off. Profit and loss, whatever it is, will be credited to his account. Profit or loss will be credited to his account. Is this clear?
Yeah.
Right? So these two features are available in European option. These two features are available in European option. Square off any time during the market. If you have not squared off on the last day of the expiry, your position will be cash settled or deliverable settled. Right? Now, in India, my friends, you have only European option. They are written as CE, call European, PE, put European. In India, you have only call European and put European. But my friends, there is one more feature which is available in American option. The feature one is square off any time during the market. If you don't square off, settlement on the last date. And in American option, one more feature is added. On the last day or any day before, during the expiry, at the end of the market close, there is an exercise window. After the market closes every day, there is an exercise window. In this exercise window, call buyers, put buyers, call buyers, put buyers can exercise and close their contract. Example, Kuldeep Bhai had bought 15,500 call for 24 June expiry. On 19th of June, Nifty closed at 16,100. If American option is available after the end of 19th, there will be an exercise window where Kuldeep Bhai can exercise his rights at the closing price of that day, 16,100. So this will be his exercise price. The contract will close. Welcome, Ketki ma'am. Always remember, Ketki ma'am, call or put buyers only have the right. Writers do not have the right. Is this clear? So on the closing of that price, what will the exchange do? Exchange will find one writer opposite to seller's position and square off both the position of the buyer and the writer. So when Kuldeep sir exercises right, exchange will find one writer who is opposite to Kuldeep sir and will square off both the contracts. Am I making sense? In India, my friends, we don't have American option. But in Europe and America, we have this. This is called Call America, Put America, CA and PA. Right? कुलदीप सर जो कॉल सेलर और पुट सेलर को राइटर बोलते हैं, जो कॉल ऑप्शन बेचता है पुट ऑप्शन बेचता है, they call the writers. Is this clear? So European option you can square off anytime in the market. If you have forgotten to square off on the last day of the expiry, there will be a settlement, European settlement or American settlement, right? In the third one, writer does not have a choice, Ketki ma'am. In American option, the writer does not have a choice. Only in European option, he has. In European option, he can wait. But in American option, the buyer has the choice. After the end of every day, the writer, there is a window which is the exercise window. And the writer can exercise his right by squaring off on the basis of the closing price of that day. Is this clear? Good. Shraddha ma'am, Sharmila ma'am, Sahil bhai. Ria Mando sir. How is the weather in Goa? Jiyavanti ma'am, how are you? Hope everything is fine. Good. So do I assume now everybody has got the basic understanding of call and put? I have a question for all of you. Today I'm going to ask you at the end of the class. When will you be a call buyer? When will you be a put buyer? When will you be a call seller? When you will be a put seller? So now what is the option premium? The amount per share which the option buyer pays to the option seller is called the option premium. The amount per share which the option buyer pays to the option seller is called the option premium. The premium consists of two parts: intrinsic value premium and time value premium. Now, my friends, what is intrinsic value premium? What is it? Have you heard this word? No one? Okay, Kavita ma'am, Mukesh bhai is wearing a gold chain. I told you I'm very poor in studies, right? When you take it to this DCF, this, that, I get confused. Mukesh bhai is wearing a gold chain, 10 grams. The gold chain is of 10 grams. Now the price of gold is 50,000 rupees for this 10 grams. What will be the value of gold inside Mukesh Bhai's gold chain? 10 grams of gold chain he is wearing, and the value of gold is 50,000 rupees for 10 grams. So Manas sir is correct. 50,000 rupees is the value of gold. Manas sir, after 3 months, the price of the gold remains at 50,000. What will be the value of gold? Vijay sir, what will be the value of gold? 50,000, it does not change. Right? After 6 months, sir goes to Australia. Sir goes to Australia. The price of gold remains at 50,000. And sir is very sick. Sir wants to sell the gold chain because he needs money. So what will be the value which he will receive? Does it change? No. Can you see, as long as the price of gold does not change, the value inside the gold chain of gold, does it change? No. He receives 50,000. Am I making sense? Good. After 18 months, sir makes that same gold chain. The price of gold remains at 50,000. Right? What will be the value inside the gold? 50,000. Nagesh sir, can you see, as long as the price of gold is not changing with the passage of time, is the value of gold inside the gold chain changing? So intrinsic value, my friend, is that value which remains in the price of the underlying, which will not change until the underlying does not change. It has nothing to do with the passage of time. As long as the gold price remains 50,000, the value of gold inside the 10-gram chain will be 50,000. Whether it is 3 months, whether it is 18 months, whether it is 6 months. If the value of gold does not change, the intrinsic value will not change. It has nothing to do with time. It has everything to do with intrinsic value. Am I making sense? Now, in the stock market perspective, what is a call? Right to buy? Yes. If I'm buying a 15,000 call and Nifty is at 15,200, yes. So what is the value? If I bought something at 10 rupees and it is at 12 rupees, how much profit I'm making? Call is the right to buy. 2 rupees. So in this case, how much am I making? Kuldeep sir, if Nifty remains on the 6th of June at 15,200, what will be the intrinsic value? $200. Does it change? As long as Nifty does not change, will the intrinsic value change? 200. So even if expiry, 15th is the expiry, and if it closes at 15,200, will this intrinsic value change? So intrinsic value is that value in the option price, that even if the underlying or the spot price closes at that price, whether today or on the expiry day, this value of 200, which is the intrinsic value, will not change. Am I making sense? Can we do a practical example so that will be more clear? Good. So let us go down to the option chain. So let us write down the strike price. So from 15,400 to 16,100, I'm taking the strike price. Nifty. Okay, so I will note down the price of the 15,000 call, 302. So I'm writing the premium. For the put, 20 rupees. 15,500 call. Total premium 219, 36 rupees. 219, 36 rupees. Right? 15,600. 144, 65. 144, 65. 15,700. 89, 109. 89, 109. 15,800. 50, 167. 15,900. 25, 245. 16,000. 1150 and 331. So I'm writing it as 12 and 331. 16,100. So I'm noting down 5 rupees and 424. So now, my friends, can you all see me? Am I visible? Can you all see my hands clearly? Is this clear? So now, my friends, always remember, what is the current price? 15,670. So I'm writing down the spot price, 15,670. right? So whenever, my friends, I'm buying a call, so if I'm buying a 15,400 call, what am I saying? Can you see me in the webcam? Am I clear? Good. 15,400. Can you see my left hand? Right to buy. What is it? Right to buy. I'm buying something at 15,400. What is the current price? 15,670. So from my buying price, right to buy, if the current price is higher, if the spot is greater than the strike, what does that have? What is this? If the spot is greater than the strike, what is it called? Intrinsic value. So 15,650, Bhavna ma'am, minus 15,400, what is it? $270, Ketki ma'am. It is called intrinsic value premium. When the spot price is greater than the strike price. You have bought something at 15,400, right to buy. Currently price 15,670. So this has intrinsic value premium, right? I answer. We have already done this 3 times. Where were you when we were discussing gold? Right to buy. What is it? Spot 15,400. I'm buying something at 15,400. What is the current price? 15,670. So if the expiry cuts on 15,670, what will you receive? What will you receive? $270. So this value of 270 is inside this particular call right now. If Nifty closes at 15,670 for the expiry, this intrinsic value is inside it. Is this clear? Now, my friends, did you notice what is this premium? 302 rupees. What is the intrinsic value premium? 270. If I subtract this, what do I get? 32 rupees. This is, my friend, time value premium. So did you remember I taught you 2 things? Premium consists of 2 parts, intrinsic value and time value. So intrinsic value is that value which is inside the option, which will be gained if the option is exercised immediately. So for the call, all strikes where the spot is greater than the strike have intrinsic value. So what was the strike? 15,400. What was the spot? 15,670. So the spot is greater than the strike. So what do we get? 270. This is the intrinsic value. Is this clear? Right to buy, left hand. Please see my hands clearly. Left hand, right to buy, 15,400, right hand spot. When the spot minus strike is greater than 0, it has positive intrinsic value. Now, my friends, what is time value premium? See, my friends, we all know that option buyer has limited loss, right? Does the option buyer have limited loss? So, my friends, then why will we become option writers? Rahul sir, why will anybody write options? Why will anybody write if he does not get something as an incentive? Why? Because we all know option writer takes unlimited risk, limited reward. So in this scenario, my friends, the option buyer gives an extra incentive. What does he do? He gives extra incentive to the option writers in the form of higher premium, which is called the time value premium. Because the buyer knows with the time remaining for the expiry, there is a higher probability for him to make money and the writer to have unlimited loss. So as this time towards the expiry reduces, as this time towards the expiry reduces, what will happen? This time value premium will also reduce, and on the last day of the expiry, when there is no time left, the time value premium will be zero. So how many of you have heard this word? Option premiums are like melting ice. They lose value with the passage of time. How many of you have heard this? Right? Kavita ma'am, we will clear this. So let's come back. So what is this 32? The total premium is 302. Intrinsic value is 270. What is remaining? Time value premium. So Kavita ma'am, on the 10th of June, when there is no time left, this time value will become zero. कुलदीप सर, दुनिया अभी बाकी है, आने दीजिए. Right? Kuldeep bhai, you have got a 15,500 call. Nifty is 15,670. What is the intrinsic value premium? Right to buy 15,500. Current price 15,670. What is the intrinsic value premium? What is it? 170. So spot minus strike 170. What is the total premium, Kuldeep bhai? What is the total premium? 219. What is the intrinsic value? 170. What is remaining? 49. Nagesh sir, what is this 49? Time value premium. This will lose with every passage of time. Closer you come towards the expiry, the time value premium will head towards zero. right? Now we come down to 15,600. Ketki ma'am, 15,600, right to buy. Current price 15,670. What is the difference? What is the difference, Ketki ma'am? Yes, ma'am, waiting for you. 70, lovely. So what is remaining? What is remaining? 74, right? So that is your time value premium. Is this clear? So there are two parts to the total premium: intrinsic value and time value. Shraddha ma'am, 15,700 ko. You are here, right to buy. But the price is 15,670. Is it lower? What is intrinsic value? You have bought something at 15,700. Price is 15,670. Is it negative? Why can you see this? Now the spot is lower than the strike. Is the spot lower than the strike? Is the intrinsic value in minus? Yes. Can you see this? You have bought something at 10 rupees. It is at 9 rupees. Is it at a loss? Is it 30 rupees down? Yeah, Shraddha ma'am. Shraddha ma'am, आपने खरीदा 15,700, right to buy. Right now it is 15,670. Is the price down? So is the intrinsic value minus 30? Technically, yes. Technically, yes. Why? Because it needs to go up by 30, then go up. But in option circumstances, negative intrinsic value, we will write as 0. Technically, yes, it is negative. Why? Because the market needs to go up. But in option language, all negative intrinsic value, we will write it as 0. Is this clear? So what is remaining? 89 rupees. Only time value premium, no intrinsic value. Now 15,800, right to buy. What is the current price? 15,670. So it needs to first go up and then become intrinsic value. So intrinsic value 0. What is time value premium? कुलदीप भाई, टाइम वैल्यू क्या रहेगा? 50. Lovely. 15,900, right to buy. What is the current price? 15,670. Intrinsic value? Mukesh bhai, what will be the intrinsic value? 0. 0. Shraddha ma'am, what is the time value? What is the time value? 25. कुलदीप भाई, 84 कहां से आया? Where did 84 come from? Total premium, right? Now we come down to the 16,000 call. Sahil sir, how are you? 16,004. Right to buy. The price is 15,670. What is it? What is it? साहिल भाई वो गलत है डेटा, उसको मत देखिए, मैंने जानबूझ के गलत लिखा है। What is it? The total intrinsic value, Sahil bhai? Zero. So what is remaining is time value. So what will be the time value, Sahil bhai? What will be the time value, Sahil bhai? मुकेश भाई मैंने 45 गलत लिखा है। What is the total premium, मुकेश भाई? 12। अगर intrinsic 0 है, what is the formula? तो premium equals to intrinsic plus time value. If intrinsic is 0, then what will remain, मुकेश भाई? Again same mistake. 12 होगा। देखिए 12 है टोटल प्रीमियम, अगर इंट्रिंसिक 0, टाइम वैल्यू, दिस विल एड अप टू दिस टोटल प्रीमियम। टोटल प्रीमियम इक्वल्स टू इंट्रिंसिक वैल्यू प्लस टाइम वैल्यू। मुकेश भाई लास्ट वन 16,100, साहिल भाई 16,100, व्हाट इज द इंट्रिंसिक वैल्यू? 0। Sahil bhai, what will be the time value? Lovely, Sahil bhai, 5. Am I clear with this? Good. But Mukesh bhai, now it's your number. मुकेश भाई क्लियर नहीं है, मुकेश भाई का टेस्ट लेना पड़ेगा वापस। मुकेश भाई 16,100 put. When I'm buyer of a put, what does it mean? Right to sell. मैं बेच रहा हूं, right? I am selling at 16,100. What is the spot? My purchase price. So what is the value? Strike minus spot. So when the strike is greater than the spot, what is it got? Positive intrinsic value. Right? So what is it? Strike minus spot. Right? So let us increase this premium to 435. What is the intrinsic value, Mukesh bhai? I will do strike price. Just can you see my hands? Right to sell. Spot price. I'm buying that. So 16,100 minus 15,670. 430 is my intrinsic. What is my time value? Total premium less intrinsic value is my time value. So what is the time value? 5. Right? Rohit bhai, why don't you try this? Rohit bhai, 16,000 put. Right to sell. 15,670 put. We are buying spot. So what is it? Strike minus spot. What is it? Intrinsic value 330. Rohit bhai, are you there? Ramana sir, are you there? Shaikh ma'am, can you try? So what will be the time value premium? Shaikh ma'am. $330 is intrinsic, total premium $331. Lovely, 1 rupee. So if I increase this to 341, Shaikh ma'am, what will be the time value premium? 11. Lovely, lovely Srinivas sir. Very good. Now let us come down to 15,900. Right to sell. Satish sir, try this. 15,900 selling, 15,670 buying, 230. What is the intrinsic value? 230. What is the time value? Total premium minus intrinsic value premium, 15 rupees. Lovely. Lovely. Right? Kavita ma'am, please try next. 15,800. Right to sell. 15,670 is my spot price. I'm selling something. Lovely Kavita ma'am. Is it 170? What is it? 15,800 less 15,670. What is it? So strike minus spot 130. What is the total premium, Kavita ma'am? 167. What is the intrinsic value? 130. So the remaining is 37 is the time value premium. Is this clear, Kavita ma'am? Good. Jiavanti ma'am, please try the next one. 15,700. Put right to sell. Current price 15,670. What is it? What is intrinsic value? Very good. 30 rupees. Excellent. What is the total premium? 109. What is the time value premium? 109 minus 30. 79. Lovely. Jugal sir. 15,600. Right to sell. Right now the price is 15,670. What has happened? Lovely. 15,600. What will be the intrinsic value? 0. Why? Because the price is below. What is the spot? It is above the selling price of 15,600. So what is remaining? The total premium is only intrinsic value 0, time value 65. Is this clear, Shraddha ma'am? Good. Manas sir, please try this 15,500. Yes, Manas sir. What is intrinsic? Yes, Patel sir. What is intrinsic value? 15,500. Patel sir, what is it? Lovely Patel sir. Why? You are selling something at 15,500, right to sell, but the price is 15,670, far above. It needs to come to this price and then come down. So what is remaining? Only the time value premium. Same thing. Are we all making sense? Are all of you all clear now? What is intrinsic? What is time value? I need a strict revision. Strict revision. Right? Whoever comes, because Sunday evening blues have always happened. 15 people have run away from the class, afraid of their families. Right? So I want a strict revision. Okay. Now, there is something called moneyness of an option. Why are we doing this? Meena ma'am, what is the reason for doing this intrinsic value, time value? There was no need. Udeep bhai, what was the need? There is a need. Because there is something called moneyness of an option. There are three types of moneyness. In the money, at the money, out of the money. The strikes are of three types. In the money options. What are those strikes? All options which have intrinsic value, positive, as well as time value. It is called in the money option. So can you see these strikes which are colored in yellow? They are in the money option. Can you see the put strike? All colored in yellow. In the money option. They have positive intrinsic as well as time value. Right? So they are all in the money option. Right? Is this clear? So which strikes in call will have intrinsic value? When the spot is greater than the strike. When the spot is greater than the strike. When spot is greater than the strike. Which strikes of put will be in the money? When the strike is greater than the spot. So K, it means strike. S means spot. Right? Good. So is the in the money clear? Now we come down to at the money. When the strike and the spot both are near to each other, they are called at the money options. So in this, can you see the first strike which does not have positive intrinsic value after in the money is called at the money. Can you see this? The first strike which does not have positive intrinsic value is called at the money. So small change in the favor, if there is a small increase in Nifty spot price from 15,670 to 15,700 plus, it will become positive in the money. Right? A small change. Am I making sense? In this particular strike, a small change, if Nifty falls by 65 points, 70 points, 15,670 to 15,600, the at the money option will become in the money, positive intrinsic value. And all the other strikes which are far away, which have no intrinsic value, which are far away from the current price, are called out of money strikes. So can you see out of money strikes have lower premiums? So can you see the three strikes? Now when I go down to the option chain, can you see this? All dark color ones, they are already given as in the money. Can you see this? This is in the money. This first strike is at the money. Other strikes out of money. Is this making sense? Good. So for a call option, S greater than, yeah, we are coming here, Kavita ma'am, K in the money call. When the spot and the strike are equal to each other, it is at the money. So what is the current value of Nifty? 15,670 spot price. What is the strike? 15,700. Near to each other. So if Nifty goes up by 30 points, what will happen? This at the money strike will start having intrinsic value. It will come here. Out of money, all the strikes which are far away. So what are the strikes? Just see this. 15, 750 and above. Can you see all these strikes? These are all out of money strikes. Only time value far away from the current price. 15,750 and above. Similarly for the put, K greater than S, strike greater than spot. Can you see all these strikes are in the money? Strike equals to spot at the money, right? And out of the money is strike greater than spot, far away from the current price. Yes? Is this clear? Now this is going to be your base. So now for calculation purpose, Kavita ma'am, Meena ma'am, we take single strike as at the money. Single strike. So even though 15,700 has some intrinsic value, it is very low. So it is very difficult to keep two separate strikes for calculation. So what we do for calculation purpose, we keep this strike as in the money, so that we can calculate the total premium. So now if I calculate which strike does have the highest time value premium, let us calculate. What is the time value premium for 15,400 call? 32. 15,400 put, 20, 52, right? Now let us calculate 15,500, 49 plus 36. So 49 plus 36. What is the time value premium? 85. Now if I start coming, where do you see the highest time value premium? 168. Which strike? At the money. So at the money strikes will have the highest time value premium. What do you see? In the money strikes, more intrinsic value, less time value. Out of the money strikes, low intrinsic, no intrinsic, less time value. So it is only at the money strikes which have the highest time value premium. Am I making sense? Am I clear? Good. Kuldeep bhai, you have taken it like a school class. आपको जल्दी भागना है, right? Don't take it as a school class. This is money making stuff. Very serious. So Kuldeep bhai, first of all, 2 दिन का रिवीजन आपका बाकी है. All you guys, big time revision needs to be done. Big time. Because I'm telling you, I'm 45 minutes behind schedule. 45 minutes behind schedule. Because the revision time, we took today 55 minutes. So please buck up. Otherwise, if you don't buck up, the next class is going to be for 4 hours. Hiren bhai, kaise hain aap? How's it going? Good. So today I'm listening to Kuldeep bhai. I'm packing up here. I know he's very tired. Yes. So Kuldeep bhai, if I'm doing something for you, I expect something in return. Full revision. Right. So let me end. Any questions here? Forgive and forget. Grudges only weigh you down and inspire unhappiness and grief. Soar above it and remember that everyone makes mistakes, right? So don't have any grudges. If I am angry at you today, forgive me, forget me. Learn to like your option classes. Rahul sir, time value. आप शायद क्लास में नहीं थे राहुल भाई. So that is why you missed out. Just recording देख लीजिएगा. The total premium minus intrinsic value is time value premium. Total premium से intrinsic value minus करते हैं, उसको time value premium बोलते हैं, right? So my friends, Kuldeep bhai, there is nothing called new. Everything is old for us. When we are born, we don't know anything. And today we know a lot of things. तो कोई चीज नया नहीं है. ये आपका मन का वहम है. Right? Nagesh sir, we are going to do the option open interest next class. Right? Yes, enjoy your time with your family, but do not forget that I am behind your back now. I will catch you if you have not revised. Rahul bhai, theta decay हम लोग करेंगे. We will learn. The journey has just started. It is my duty to make you the champions. For me, a champion is not the one who is the first in the class or first in life. For me, a champion is one who rises every day to move a few steps forward with the belief that even if he falls, he's going to rise up and move ahead. For me, that person is a champion. I don't want persons who are best in the world. I don't believe. I want you to be the best version of yourself. The best version. right? Great. Kuldeep bhai, I can show you the theory will help you when we do live classes. Yeah, Shraddha ma'am, all the best for your revision. All others, happy weekend. Make sure the revision is at full force when we meet the next time. Bye-bye, all of y'all. Take care.